Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. So, welcome back to another weekly watch list video. In this video, we go over everything you need to know for the week ahead in the stock market. Now, before we get into it, hit the thumbs up for the video. If you are new, consider subscribing. All right, let's get right into it. We start every weekly watch list video with the earnings for the week. You can see the companies that are showing earnings this week on the screen right there. As far as earnings season goes, it's basically over. All the big companies have already reported, but if you are interested, these are those earnings. If you do want to trade them, like I tell you every week, just keep in mind the premium is going to kill you if you don't get a big move in your favor after earnings. All right. So just, play it safe. Keep that in mind. Trading around earnings in itself is very risky, right? You never know. A company could do an amazing job on their previous quarter, but guidance might not be so good. And it ends up, hurting the stock. So anyway, that's the earnings for the week. Okay, now the economic calendar for this coming week. We have a pretty decently packed economic calendar. We have Powell, okay? Powell on Tuesday is going to be testifying to the Senate. On Wednesday, Powell is going to be testifying to the House, all right? He tends to move the markets with what he says. So be well aware of Tuesday and Wednesday. Wednesday, we also have the job openings, which is the JOLTS report. That tends to move markets at 10 a.m. So if you're in a trade, be aware that these things will definitely move that market really quickly. And at 2 o'clock is the beige book. That also will give a lot of information on the economy, what the Fed governors in their districts see, happening. And it's a nice report to look over to see how the economy is going. It is also used by the Fed to set economic policy. So it's very important. On Thursday, jobless claims again. We got a Fed governor speaking. And then on Friday, just when you thought the week was coming to a nice, easy finish, we have the jobs report, a massive report. The jobs numbers have been definitely setting the tone for the overall market. All right. So you have that on Friday. Now, looking at the Treasury yields. All right. I can't stress this enough. So when the yields are moving up, and you can see here for the past month, this blue line, the yields have been making higher highs and higher lows. It's been trending from the bottom left of the chart to the top right of the chart. That's not good for the market. All right. But you can see here on Thursday, the rates for the 10-year topped out at about, they hit a high of 4.09. All right. This is a very big move for the month. Huge move. An even bigger move just from the end of February. That's a big, big move. The market did not like that. Now, what happened here on Thursday? After we topped out, we saw a very big, huge move down in yields, and we saw a very big move in the NASDAQ market to the upside. These are moving inversely with each other. So, what we do every day in our Discord, this is something that I post every morning, the Treasury yields, those bond yields, just so that we know what we're dealing with for the day. Now, they do move during the day. They do move with economic data, so you got to be aware of that. But on Friday, you can see that's a very big move in the 10-year, down 0.115. That is very, very big move. So we saw the market really like that. And, saw a nice day on Friday. Basically for the week, Monday, Tuesday, and Wednesday were not so great. And then Thursday and Friday just totally had some nice days. So most of the gains for the week happened on Thursday and Friday when the Treasury yields topped out. So we're going to want to keep an eye on that. Keep an eye on that 4.00 level. Okay? That's a big one for the 10-year. Every time we go over that, the market hates it. But we did pull back. So we'll see what happens this coming week, especially with hearing from the Fed and getting some economic data. The yields will definitely be moving around. So it's going to be a tough week to trade. All right. As far as the sectors go for the week, we saw, a different story this past week. This past week was a risk on type of week. Not Monday, Tuesday, and Wednesday, but Thursday and Friday made up a huge part of this weekly relative performance. Monday, Tuesday, and Wednesday did not look like this. And you can see technology had over a 2% move just on Friday. So all the gains, like I said, for the week were from Thursday and Friday. All right. Going over to our compass, the SPY. Now, what I'm about to show you is going to blow your mind. Before I blow your mind, we're going to go over and look at what happened last week with our volume, our point of control, our trend lines, and our key moving averages. So what I look at, I'll just go over in case you're new to this video. 200 moving average is this orange line. The 50 moving average is this cream colored line. And then I look at the 20 EMA for a clear momentum strategy. This is basically just momentum. On the 1 minute, I use the 9 EMA. But the two major moving averages that everyone looks at on the daily chart is the 200 and it's the 50. Okay? So now knowing that, going back to last week, we were just over that 50 moving average. Actually, basically closing at it. Okay? Closing at the 50, getting a bounce off the 200. Came up, broke the 50, and then on Monday, we came back down. So Monday, Tuesday, and Wednesday, then retested that 200 again. On Thursday, opened up at the 200 and at this key trend line, saw an incredible day, broke back and held over the 50, gapped up, and then broke out again. So Thursday and Friday were very bullish days, all coming off of this trend line and all coming off of this 200 moving average. All right. So this is where we stand right now. Now, what I'm going to get into in a second is a pretty interesting thing. Before I do that, let me go over to the Qs, and we're going to look at this one with the volume as well. We had the fibs on here from last week. I said if we pull back, maybe that 50% pullback gets bought up. It did, and we saw Thursday and Friday a nice rally through the point of control, and that's where we stand right now. So the NASDAQ is over the 20, it's over the 200, and it's over the 50. But what hasn't happened yet, the 50 has not crossed over the 200 yet. On the SPY, this golden cross has already happened. It has not happened yet on the Qs. We need to be very, very wary about that. That has to get crossed over before we could get so into the QQQ. Even though it's been up 12% on the year, we still have not had that golden cross happen yet. So now what I'm going to do is, like I said, blow your mind. I'm just going to remove all that noise, and we're going to look at a nice clean sheet here. This is the daily chart. This is the past year of trading for the SPY. Each one of these candlesticks represents one trading day. Now, this is patterns. Patterns don't have to repeat, but they often do. So I'm going to show you a pattern that I started to notice when I did the research for this video. Okay? Now, what I'm going to show you guys is this section right here. Okay? What happened last year, and I'm going to show you what is happening this year and how similar of a move we're seeing. Okay? We're going to start back here. We're going to draw a little bit of a trend line. Okay. So what does that trend line mean? All right. That trend line was a series of higher highs and higher lows before breaking higher right here than the previous high. What we saw here, a series of higher lows, higher highs, a higher high here, then right here. Very similar. That bounce off of the trend line gave us these big green bars. That bounce off of this trend line gave us these nice big green bars. Okay? That's the first similarity that has happened. Now, what is the next similarity? That is going to be the fibs from the low here to here. We saw a bounce at the 61.8, right? Right here. We saw the bounce after the pullback at the 61.8. Keep that in mind. I'm just removing this. We're going to do from here, which was the lows, to the top. We have a bounce at the 61.8. Very, very similar. Like I said, patterns tend to repeat themselves. A very similar trend line, very similar trend line, very similar bounce off of that trend line, very similar bounce at the exact same fib retracement area. Okay? Now, if we look at this and just fill in the RSI, all right, I'm going to take off these moving averages and we're going to take a look at the RSI. The RSI back down here, right, had this move and then a quick move up right here and a quick move up. Pulled back here, same situation. And now we're having a quick move up. We're currently at 52.82. This move here with a couple more gap up days came to 55.47. So what does that tell you guys? First of all, these bounces can happen, right? That's normal. This is a normal bounce. Normal bounce off of a trend line, all right? We made a higher high back here. Right here on this nice move, were we expecting a higher high? Yes. A lot of people get caught off guard here. I don't want you guys to fall for a bull trap. There's a good possibility that this can end up being a bull trap. So where does that bring us to? Where did we stall out? We stalled out right here, right? On this nice move up, rejection, rejection, a lot of trouble around that area. Maybe we get back to that 410. If we do, I would be looking to heavily short the market just based on what I'm showing you guys here and this pattern that we're seeing. The only difference is back here when the market was trading at this level, interest rates were not this high, right? The Fed rates were not this high. We've had earnings come on down, but for some reason, we're still trading around the same area. So if we do see a pop-up on Monday or Tuesday or whatever this week, I would be looking for shorts here and then see this very similar situation happen. All right. Like I said, I was going to blow your mind with a lot of similarities here. And I hope I did. I hope I earned your thumbs up. We did look at the Qs. What I'm going to do is we'll look at the Dow Jones now. We saw the break of this pennant. Maybe we come back up and retest this ascending trend line. It's possible. There's still not much more room here. So what I would look for is where we saw support to possibly be that next area of resistance, and then take the market back down short. That's what I would be looking for. The IWM is a different story. This is all those small caps. This is the Russell 2K. We saw a nice bounce off of this trend line. The valuations for a lot of these stocks is actually still pretty attractive. So the small caps have really outperformed the Dow. It's outperformed the S&P 500. These are looking pretty good. So the IWM, if you can look up some of the stocks that are in that, maybe you can find some good deals. But that's going to be it for me. I'm not going to go over any individual charts because I want to see direction become clearer before I predict any moves for any specific stocks, because most stocks will follow the market. So if we know where the market is going, and by the way, nobody knows exactly where the market's going. I'm just doing technical analysis. We saw a nice technical bounce on Thursday off that 200 in the trend line. Simple as that. We saw a nice bounce. But where we go from there, and that's where I believe we're going. Doesn't mean we're going down after maybe hitting, some of that resistance, but that's what my opinion is. All right, guys, hit the thumbs up for the video. I'll see you back on the next one. Take care.